The Gsec market massacre continues. The bloodbath in the government securities market continued a day after the union budget, with Gsec yields further heading north, closing in on the 7% mark. Players in the debt market are disappointed by the possibility of high Gsec supply hitting the market. The government has penciled a large gross market borrowing of 14.95 Indian rupees lakh crore in FY 2023 against FY 2022's revised estimate of about 10.47 Indian rupees lakh crore. Yield of the erstwhile 10-year Gsec rose about 7 basis points to close at 6.9130%. Price of this security fell about 45 paise to close at 94.425 Indian rupees. Yield of the newly issued 10-year Gsec jumped about 5 basis points to close at 6.8805%. Price of this security fell 37 paise to close at 97.57 Indian rupees. Dwijendra Srivastava Srivastava Sundaram MF observed that the Reserve Bank of India's statement that Gsec yield curve may be viewed as a public good will be tested to the hilt, as the macro setting is quite challenging for India at this point of time in the backdrop of US Fed looking to raise rates. He emphasized that rising yields is the market players' way to convey to the Reserve Bank of India that they want proper communication to the effect that it will step in and handhold. Their intervention is required, particularly in a rising interest rate environment, Srivastava said. Yield of the widely traded erstwhile 10-year Gsec has jumped 23 basis points since the announcement of the budget, with its price declining 1.55 Indian rupees. HSBC, in a report, opined that it will be difficult for the market to absorb such massive supply in the absence of support from the RBI and a time when banks may not have as much appetite for holding government bonds given normalizing liquidity conditions and the improving economy. Therefore, we raise our forecasts for 10-year Gsec yields to 7.5% by 2Q 2022 and 7.8% by the end of 4Q 2022, it said.